So, FOMC, welcome, ladies and gentlemen, to today's live stream. You're going to work out exactly what you need to be aware of because today is a very important day for the markets. Why? Well, it's not just the fact that it's FOMC. We know that there is a 99% chance that the Fed is going to keep the rates as they are, which are currently hovering around the 4.32%. So investors are like, okay, we're probably not going to get any rate cuts. I mean, if we were to get a surprise rate cut coming out today, then boy, that would just send the markets like crazy. But given that the US dollar itself is so big, it would never happen. Something wild would have to happen to get the Fed to cut the rates at the last minute. Now, with that being said, what's the focus for today? Well, word on the street is they are going to be paying close attention to what the Federal Reserve's view is on the expectation of the economy with regards to these tariffs. That's what's the doom and gloom about it. What is the market going to do if they hear the Federal Reserve say, we're not going to get any rate cuts, or we're only going to give you 2 rate cuts, because that's the speculation. Investors have been betting for 3 rate cuts this year. Now that's been moved down to 2 rate cuts. If Powell comes across as somewhat hawkish in this, then we can go back to the usual business and see that gold will continue to move up and investors will be taking advantage of gold, because the expectation of interest rates not being cut will force investors to sit in dollars, but investors will be concerned because if the Fed is not going to cut, that means there is an expectation that the economy might be struggling in the future. So investors will go and plow themselves into gold. Park the idea, of course, about tensions overseas in the Middle East. Yeah, you've got a reason to why you're seeing gold making a move to the upside and Bitcoin is just pretty much chilling. Now, we've seen Bitcoin make a nice little move. Ethereum saw a nice move to the upside, and of course, Solana. Given that Bank of Japan is not looking to cut the rate or increase the interest rates anytime soon. However, as we've stated before, wage inflation. Now, their CPI data comes out next week, and if that CPI comes in and shows that inflation is going up, then we're probably going to get more rate hikes from the Bank of Japan going into May. And that won't be a good sight for the marketplace, given that the rates are already high as it is. Increasing it a little bit more is probably going to be a problem for the carry traders. Now, in today's live stream, I'm just going to break down what you need to know and how you can approach the market, what news is hitting the marketplace. We've seen some endorsement by Blackrock saying that Bitcoin will be good for you if you do see inflation going up. So that's good news. Maybe it's now Bitcoin's time to shine as the hedge against inflation. Price action traders are looking at Bitcoin thinking it's going to flop, it's going to go down. You've got your bearish wedge patterns and what have you, bearish flags and all that madness. But fundamentally today, it could actually flip. Bitcoin could actually just shoot up if the Fed does give the market a reason to believe that they will cut the interest rates. Even though the economy is doing wonderful, it's a double-edged sword, man. So let's break it all down for you, ladies and gentlemen. And listen, if you are new and you're not tuned into it yet, make sure you do subscribe, because we will be going live tonight for the FOMC. So the FOMC starts at 6 p.m. UK time. I will be live beforehand so that we can get everybody in and get ourselves prepared for the madness that is about to unfold. And I will say this, today might be a nothing burger day. It really could be. The markets may not get anything from Powell, and it will just continue to do what it's doing, which is naturally a little bit of a recovery across the board. Short squeezes could be coming into play. Anyways, let's get into the program and break it all down for you guys. Mad love and respect. Here we go. So, stock stalls as traders look ahead to Fed meeting. Okay, so today we've got it right here. The Federal Reserve will be coming out with its funds rate at 6 p.m. UK time. Then you've got the economic projections, and inside the projections themselves, they're going to be looking at how the Fed is positioning itself for these tariffs with Trump. Now, there is some news that Trump won't be really doing much today. He won't be speaking much today. He's having the day off as such, but just be mindful that he can go onto Truth Social and say whatever it is he wants to say. So just keep an eye out on that feed in case he says something and the markets go a little bit crazy for it. But after the economic projections, we'll be having the statement, and we're going to know what words were retracted, changed to give the idea of where the Federal Reserve is going to be. But this is where the action's going to be. It's at the press conference where not investors, but news anchors will ask Powell the questions. And sometimes they'll ask questions that will just pretty much give you the, no, I'm not allowed to talk about that, and I refuse to talk about that, so we're not going to focus on that. Happy days. So if you're going to watch anything, that's the thing you need to watch, the press conference. So make sure you are subscribing and hitting the bell notification so you are alerted about that live stream tonight. Now, going into the marketplace. So I was reading this article and there was something pretty important said right here by Anika, who happens to be one of the people behind Wisdom Tree. Now, you know Wisdom Tree, they buy the Bitcoin ETF. They're always buying it and selling it. And they're saying that we're trying to gauge whether Powell still holds that view that the US economy is on firm footing. Reason is that if the Fed can see the economy is doing fine, then there's no reason to cut the interest rates. That means at the current rates that we've got, inflation in one way or another is going to start coming down because it has shown that it is going to come down. And given that the last reading came in, that inflation came up higher, that's the problem that the Federal Reserve has. It's sticky. It's not really giving us a trend in a drop in inflation. Now, of course, these tariffs are going to trigger the potential for inflation to go up. Now, we understand inflation is when they print more money. Now, we know we're going into what appears to be quantitative tightening coming to an end. Now we're waiting for quantitative easing. So the M2 supply is going up, the money print is going to start turning, and China's at the same time. But until we do get the cuts, that printer won't be turning on until the Fed can actually see if they are going to compromise the economy with these current rates. They will only cut the rates if the economy is compromised. According to Besant, he's talking about no recession. The US ain't going to have a recession. And the correction right now is healthy. So you've got to really just say to yourself, is the market really giving us the sign that it's getting ready to make a little bit of a reversal? Let's break it all down. So first things first, what's going on across the board? Well, I've been reading and I saw this article here from the Financial Times about Wall Street frenzy creates $11 billion debt market for AI groups buying Nvidia chips. Problem is this is looking like a monopoly and Nvidia's always going to win. Now, that's going to then start getting some maybe court proceedings coming into play, court action to try and prevent this monopoly. But if Nvidia's providing the product, then everyone's going to go to Nvidia. But what you got to take away from this is this. The expectation for earnings in the future is going to excite a lot of investors because of what's going on. Money is being given out like Blackstone, PIMCO, Carlyle, Blackrock. They're amongst the companies that are loaning out this liquidity to AI companies to get involved and buy Nvidia chips. So what does that tell you? It tells you expansion. It tells you that the AI market is showing a demand for credit. And if there's credit being given, it means money is being put to work, which naturally does lead to investors seeing a return on earnings per share and dividend. Now, with that being said, quickly going over into the chart, you can see Bitcoin's doing a nice little move to the upside, not really going anywhere as such, still within ranges, but I will be talking about Bitcoin in a split second, just to go and have a look at where we are with the stock market. So Nvidia is gapping down at the open. We've got a little bit of a gap up at the open. So trading at $117.29 in the open. We're going to Microsoft. That's also gapping up ever so slightly, but we do have a little bit of a gap right here that we do want to see them close. Tesla saw some decent news that he's now been given, or Tesla's now been given authorization to allow these taxis to not be manned. So that's going to be very interesting to see. That'll be quite scary, but anyways, would you sit in a car that's not manned? I don't know. That's not for me. MicroStrategy. So MicroStrategy is gapping up at the open and going into the options chain. From yesterday, we can see we got quite a few buy calls coming in for MicroStrategy, MSTR right there. Buy call, buy call, buy call, buy call. And you got a few more right here where you got 2.6, 2.9, 2.94. So this was from yesterday going in towards the close. So there is an expectation that the markets are going to be moving upwards today. Going into the stock market, just to put it into perspective, NASDAQ is trading sideways, and this is something that you are going to see. You're going to see NASDAQ just moving sideways before we actually get to the FOMC itself. All right. And with that being said, you are putting yourself in a position where you could be prone to wick volatility, spike up, spike down. My strongest recommendation is this. Whatever concept that you use regarding trading, this is a time where the markets have got free roam to go anywhere they desire. Any bout of news that comes out that triggers the markets, it will move price up or down. Now, if you're using high leverage, you're going to get smacked about. Just wait till the news finalizes. Why? Because once we know where we are with the Federal Reserve and the information that they give us, these are the two scenarios. If Powell turns around and says that we are in line to cut the interest rates this year, then the expectations of cutting the rates by 2 cuts is going to be good for investors. Investors can now start moving money out of assets that they've been putting it in since now, up to now, and then start going into risk on assets. We know that the Japanese ain't going to be increasing their interest rates. Going into the article itself, we can see over here where we are, right there. So it says here, Governor Ueda was cautious in his guidance. Now, we've been talking about the fact that Bank of Japan have got this story about inflation with the wages, but their CPI data comes out next week. And if it does show that inflation is ticking up, then that means there is a potential for an increase on the interest rates for the Bank of Japan. That is a problem. Why? Because the last time they increased those rates, the stock market took a little bit of a tumble. And I'm not talking just any tumble. It was a decent drop to the downside. And that was this move down here. You can see from the highs up here, 1st of August, when they actually increased the interest rates was the 31st of July. But going into the 5th of August, they made this drop to the downside, which pretty much set the market up for this rally to the upside. And why did that happen? Because carry traders had to pay more for borrowing the yen, which is then used to convert over to the dollar. Speaking of the dollar, we're going over right now, and you can see the dollar dominance has made a nice little recovery from these lows. We were talking about it yesterday, that the dollar is very undervalued, but it seems that the purchasing power of the dollar right now has got investors interested at buying dollars. Now, the reason why the dollar's going up, and then, of course, you see Bitcoin going up, you're probably asking yourself the question, what the hell's going on? How is it that Bitcoin's moving up and the dollar's moving up? Well, you've got to consider that the dollar's been moving down, but Bitcoin hasn't been moving up. So there could be the idea that accumulation is coming into play. But one thing you do need to take into consideration when you're looking at Bitcoin is the commitment from traders. Look, the orders. What is it that you are noticing? Because we watch this chart every single day. What I am starting to notice is some guys are starting to pull the orders. And I spoke about this last week. We want them to start pulling the liquidity from here, because the longer it stays here, the more likely price is going to start navigating towards these areas, okay? But if you can see, look at these little dark spots here. There's nothing going on there. That means that there are orders that are being pulled from the market. If you look closely, you can see that there's not really that much. It looks like there's a lot there, but we're looking at this every single day. And go into the live streams from this week and last week and pay attention to this. You'll see that the concentrations of bids are starting to come off. That could lead to the following story. It could mean that there is an expectation that Bitcoin's going to continue higher. That means if Bitcoin does continue higher and starts hitting these offers, then that means those same bids down here will probably move their positions up to buy Bitcoin. Because you can see right here, we're not really seeing any bids coming in. Look, you've only got a few of them here. You got one at 13 million at 82,466. You got one 3.3 million at 83,184. But there's nothing going on in this move. So that's telling me that there's no interest on the bids, but there is interest, because what they're doing is they are bidding up. So they're coming in. As you look here, you can see someone picked up planted a $14 million order there, but didn't quite get the fill. But you can see they're just coming into the marketplace to effectively get filled and offer out. Why? Because when you look at the bid and the offer, if the bids can see that there are participants willing to sell, then they're going to want to get their orders in when prices drop so that they can sell into those same people, okay? Now, the only way that they can sell into these people, if there is an expectation that cryptocurrency is going to start moving up. Well, everyone across the board is expecting that cryptocurrency is more than likely going to make reversals. Is this the point? Is this the point? People then put the information together, and then they say to themselves, you know what? Let me just go and have a look at Blackrock in the ETF and put that assumption to play. What are they doing? Well, 567,000, that's good news. They're not selling, not doing anything. Coinbase Prime has been putting money into Grayscale. We have seen 200 Bitcoin going into Blackrock itself. ARK has been moving Bitcoin around. And of course, that's just what's been going on in the last 20 hours. So there's not really been any transactions happening in the Blackrock ETF or amongst all ETFs in the last 20 hours. So as we go into the open, it's going to be interesting to see how the market is going to react to the FOMC news release. Okay. Now, with that being said, it's what I spoke about earlier on. Recession will be a big catalyst for Bitcoin, BlackRock's head of digital assets says. He says that the US recession could drive Bitcoin's next bull run due to expected liquidity injections. So what does that mean? Well, if the economy is okay right now, why does the Fed need to put any money into it? It's working. But if the interest rates are really putting a problem for the marketplace, then they're going to say, you know what, we need to cut the interest rates and maybe start putting liquidity into the market. But the problem is you've got this right here. This is the big tech, Magnificent 7 cumulative total, in essence, credit. It says here that capital expenditure refers to the funds businesses use to acquire, upgrade, or maintain long-term assets such as property, buildings, equipment, or technology. Okay? What is this showing you? It's showing you that the money is there in AI because the big boys are spending it, the Magnificent Seven. Just look at this. Apple, they were spending before 2,908 million. That's gone up to 2,940 million. Then we've got Nvidia, 813 million. Now it's 1,077 million. All right. Then we've got Microsoft, 15,804. Previous reading was 14,923. And it goes on. And Amazon, look, 27,834 million. So they're spending money. And this is what's going to fuel investors' desire to want to get involved in stocks. And if they start getting into these big stocks, that's naturally going to fuel the market to move up. And today we're going to know if these guys are justified in their purchases and whether they're going to continue investing money into AI. You know that Nvidia is coming out with a new setup, with a new digital computer, AI computer. So that's naturally going to be another win for investors buying Nvidia. So that means Nvidia in principle should be climbing up, even though we've got high interest rates, even though the expectation of cutting the rates or not is not in the scope. We want 2 rate cuts. We want 3 rate cuts. We want money to be cheap. And if money's not going to be accessible, which it is, because the only way that they're putting this money to work is if people are investing in the company and, of course, buying the product. Because if you haven't got a product that people can purchase, how are you going to be putting any of that money to work to achieve what we're witnessing in front of us? So from a fundamental point of view, the stock market, even though it has corrected quite aggressively, we then say to ourselves, well, is this another opportunity to just buy and sell? You know, that's the logic that you've got to run with, ladies and gentlemen. Is it a time for us to get out? Is it a time for us to step back in? And that's where we are with the market. Now, going over into Bitcoin. Bitcoin price action. So 83,957 is trying to take out the 84K region. Something that I do want to give you guys a bit of heads up on. As we go into the FOMC later on tonight, this move to the upside is usually seen as a bit of a float. All right, what do I mean by that? So whenever we've got news announcements, prices tend to just float upwards, okay? It all depends on the narrative and the sentiment that's happening in the marketplace. As it stands now, Bitcoin is floating upwards, all right? That means as we get into the FOMC, there is a potential for sharp movements, right? So what I'm saying to you is just be very careful when you are trading. How many of you right now are sat in longs on Bitcoin from this range? That's the question I've got for you. Type 1 if you are sat in longs and you've been buying it within this low range that you've got right here, okay? And the reason why I'm saying that is because if we're short term with the way money is being circulated in the marketplace, that means every time you see a rally, are you selling it? Most investors are doing that because anytime it retraces, you see a rally, everyone gets excited, and then it just drops down again. Bitcoin has been showing us that behavior. Look, you've got this rally to the upside, sell the rallies, it comes back down again. Sell the rallies, and then it comes back down again. Sell the rallies, and then the logic would be for it to come back down again. That's all going to be based on how Jerome Powell is going to present himself later on. Here we go. So we got ones, 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 ones. How will you play FOMC today? Well, look, I'm very reluctant to trade today on the FOMC because I know I'm trading Euro, and I know that Euro has been experiencing some very interesting behavior. Given that if we look at Euro on the daily time frame, we do have a significant vector candle region down here that could lead Euro down, okay? Fundamentally, we've been getting information about the US economy saying that things are okay. But, you know, if we've got the, where is it? We've got unemployment claims coming out tomorrow. And of course, if that information shows that there are more people claiming benefit, that's bad for the dollar. That's good for the euro. But remember, the euro is moving up because of other things in sense of Germany wanting to spend more money on defense. So that's fueling euro's move. But at the same time as well, when we look at the rate swaps, we can see now that days till expiry is 26 and they're still keeping it at the rate of 1.91%. This number right here is going to determine if this is a good rate to get involved in euro based on what Jerome Powell is going to say. So this is what we know. We know that the Federal Reserve is not going to cut the rates today. There's a 99% chance that that's going to be the case. Here we go, 4 hours and 34 minutes. Again, if you are new to this live stream, make sure you're liking and subscribing because we will be going live for the Federal Reserve Open Meeting Committee. And that's going to be at 6 o'clock, but I will be live before that. So it gives you a chance to get involved and participate in that. But this is where we are. Target rate probabilities, 99%. Okay, we are staying where we are. And there's someone that's betting that there's a 1% chance that they could cut the rates out of the blue. And like I said, if they do cut the rates, ladies and gentlemen, that would be a massive trigger in the marketplace. And it's something that Jerome Powell, not Jerome Powell, but the Federal Reserve has done that before, where they positioned the market to believe they were keeping rates at the prices that they were expecting. And then, of course, when it came to it, last minute, they changed it. So God forbid that was I mean, it's good news if they were to cut the rates, but what would happen initially first is you'll see an influx of money going from one point to the other. That could cause a sell-off and then a massive run-up. So that's something you've got to take into consideration today, ladies and gentlemen. According to the market snap, or should I say market surge, we've not got any accumulation days. Looking at the information here, you can see that stocks that were up on volume in yesterday's close was only 142 against down on volume at 226, and 2 stocks were breaking out and 17 were near a pivot. So what does that mean? So if we make the assumption that we have got stocks creating what could be, for example, a cup with handle, okay? So that means there is effectively a pivot coming into play. So they're getting ready to pivot away from a range like this, okay? We've also got the idea that we've got a pattern. So like rise, retrace, continuation to the upside. Some stocks are effectively creating that logic right there, okay? So 17 stocks are near that situation, getting ready to break out. But what you've got to take into consideration is where they're breaking out from. So that's near pivots. But breaking out today were 2 stocks. Let's have a look at those stocks that were actually breaking out. The 2 stocks that are actually making a move, and this is really important. You've got BECN, which is Beacon Roofing Supply, okay? So if I go and look at Beacon Roofing Supply, what is it? Average daily volume, 1 million shares. Not that great, but it's okay. Relatively priced, and it's about to break out, okay? When you go into the weekly time frame and look at its market cap, it has a relatively decent market cap, okay? How many funds hold it? 617 funds hold it. So it looks like it's a decent stock. What is it? It's a construction company, distributes roofing and related building materials through 586 branches in 50 states and 7 in the Canadian province, all right? So it looks like construction is actively happening. And this looks like a little bit of a breakout. Maybe there has been contracts that these companies have got, and that's leading their share price to start climbing up on the expectation of earnings in the future. But what you got to look at is it a big stock? No. Look at the next company, Mueller Water Products. A water company is breaking out. All right, people will always be, look, manufactures water infrastructure, flow control products, and water distribution. I was about to say it was drinking water, but no, it's just the way water is flowing. Again, are these 2 stocks that you guys are familiar with? When you sat down with your parents or your grandparents, and if they're tech savvy, if you started talking about Nvidia, Microsoft, and Apple, are they going to be familiar with them? Or are they going to be familiar with companies like this? What does it tell you? It tells you that these 2 stocks breaking out are breaking out for their own reasons, whether it's new contracts, great expectations on their earnings. That is it. And if you don't have the big boys breaking out, then you ain't going to have a market breakout. So that's something to take into consideration when you're trying to understand if the stock market is starting to move. If you've got lots of stocks breaking out, then it's good to see if those stocks make up any of the Magnificent 7. How many big caps do you have breaking out? Because behind a breakout of a big cap, you've got money behind it. That justifies movement to the upside. That justifies people buying. Okay? So that's where we are with that story over there. Now, going over into it, let's just quickly go over and look at Bitcoin. Trading positive for the day. And just going into the daily time frame to put it into perspective, we are still trading below the 200 EMA, and Bitcoin has been somewhat tricky to trade inside of these ranges. A lot of people are coming out with the idea Bitcoin is going to drop down. The trajectory for Bitcoin is lower because it's not actually making any significant ground. It's making lower lows and lower highs. The idea is, from a trends perspective, Bitcoin is rolling over. Going into the weekly time frame for Bitcoin for the holders, you can see that we've still got a little bit more of a vector candle to claim from these areas right here. And this is an imbalance. I think that would be a brilliant trigger for Bitcoin to go into to mark up a discount. Okay, that's my opinion right there, ladies and gentlemen. Any questions? Any questions from that? How many likes we got? 330 likes. Come on, man. Come on, man. Where are you at with the likes, ladies and gentlemen? Whilst you're doing that, I'm going to quickly go over to the USDT chart to understand where we are from that logic. This is a psychological chart. And someone mentioned that, can we see it as a fear and greed chart? Yes, you can see it as a fear and greed chart. Why? Because this chart represents where people's psychology gets triggered potentially based on where Bitcoin goes. We know that when USDT goes up, Bitcoin goes down, okay? And when USDT goes down, Bitcoin goes up. Now, we do have these ranges right here on Bitcoin, all right? Now, these would be the previous vector candles that occurred at the top side of Bitcoin's move. That means if dollar goes down to 5.16%, what you really want to see is the following. You want to see dollar dominance going down, okay? That's what you want to see. That to be going down. You want to see dollar yen going down. You want to see dollar CAD going down, okay? When you see the Forex pairs going down, all right, that means that there is a demand for assets against the US dollar. So value is not going to be expected in the dollar. The problem is your rates now are going to stay the same. So you've got a higher yield for a longer period of time. That could transition investors into going into dollars. That means from the USDT chart perspective, you can look at that and say to yourself, well, maybe in this area here, that's going to trigger investors' belief that maybe Bitcoin is too expensive. I want to get out, which would naturally then lead USDT to come back up. And if it does make a move back up, the idea of value could be triggered here again, where Bitcoin could find its ground and then make reversals from, okay? However, if today the market gets what it wants from Powell, and they do hear that they are going to cut the rates, and it's more of a dovish tone. We want a dovish tone. We don't want hawkish, because hawkish means interest rates higher for longer, and we need more data. If he turns around today and says that the tariffs are going to be a problem for us, then anything that you're witnessing in the chart moving up right now will come back down. It really will, because it means that investors are now having to be forced to change their expectation of the future, because the Federal Reserve and all the rest of the gang, they don't have a future that is promising based off the information they're getting about the impact of what tariffs will do to the economy. So again, if USDT comes down to here, Bitcoin's shooting up. It's a psychological area. And quite frankly, the true psychological area for USDT would be down here. That would then send your Bitcoin, in my opinion, to all-time highs and beyond. That's what you're looking for. You want it to just slump. And with USDT slumps, Bitcoin, ladies and gentlemen, is just going to be on a crazy move to the upside. It really will. Okay. Any questions? Any questions? Any questions? Market is going to go down either way. ETH and alts are leading. Never a good sign. Okay, then. So if I had a decent profit on Bitcoin, would I close it just now if a dip below the 50 is due? Look, man, listen, this is what I mean. If you've got profit in the chart, if you can promise me that you knew for a fact that you were going to make a profit in your trade, and you know for a fact that Bitcoin is going to continue higher, and you know where it's going to stop, why are you even asking if you should take profit? Because you already know. You're looking into the future. You can see the future. But the chances are very, very slim that you know exactly where Bitcoin is going to go, because no one knows where it's going to go. I give you my interpretation of how I'm looking at the idea of value with Bitcoin and where we'd like to see it go, where it would likely trigger a move from. And if you don't get that move in Bitcoin, what are you basing your decision on? Hypothetically, if you see Bitcoin make a move down like it did yesterday, you were getting information about who was prepared to buy it and who was prepared to sell it. Psychologically, what was going on? Everyone was short in Bitcoin. You had that big short dude. He was short in Bitcoin. It was like, oh my God, short Bitcoin. Well, now it's made the reversal back up and shaken out all the guys that were running shorts yesterday on Bitcoin. Okay. So when you see a bold move in Bitcoin, that's when you pay attention to it. If you see Bitcoin shooting up, would that be triggering the idea of investors getting a little bit scared and wanting to sell as much Bitcoin as they can, which could then lead to an exhaustion of buyers being trapped at the top side of the move because they've seen Bitcoin move up, and then you would naturally expect Bitcoin to come down? What if you see Bitcoin come down today and really attack these levels? What if you see it come into these ranges? What are you thinking? I better sell my Bitcoin? Hell no, you don't sell Bitcoin, because this whole area here is commitment. It's here saying, we are happy to buy Bitcoin. Sell it to us. When you're thinking of bids, think, sell it to me, give it to me, give it to me. I want it, I'll buy it, I'm ready for you. And likewise with the offers, You've got people saying, look, man, I'm up here. Please give me your order. Come and buy it from me. I'll sell it to you at this price. And then you got someone that's saying, you know, I'll buy it at that price. I like that price of Bitcoin. That's what's going on in the charts right here, ladies and gentlemen. Okay? Tina, do you still hold on to your 8K projection? Do you know what? Yeah, I do. Why? Because Bitcoin can easily come down. And people are like, that it can never go to a certain price point. I mean, if we're going to really talk about it, it went down to 8K on a different exchange, but it didn't go on the exchange that we talk about. And it's not been registered as a time that price has been trading at 8K. It went to 8K, whipped to it and reversed. Do we claim the victory? No, not really. But we're talking about what event could lead Bitcoin to go all the way back down. Okay. You've got to remember, people look at it like this. Bitcoin will never go to a certain number because they don't think that people will sell it. But when you've got a percentage of the Bitcoin sat in here, you think they're going to leave it to go to 8K before they sell it? No. They're going to get rid of it beforehand. So, okay, then maybe, I mean, a drop all the way down to 8,000, that is quite a significant drop. Now, it's a very big drop for a $10,000 Bitcoin. I mean, let's be honest now. If price gets close towards it, we've got a better chance of Bitcoin hitting 8K when it gets to like 37 or 30,000. You've got a better chance of it going to it when it's at 20,000. And you've got a better chance of it going to it when it's at 15,000. My last projection was at 16. And we said it could go down to 8K. Okay? Happy days. If it breaks above 25, it's gone. Go and look at that 8K video and then go look at the videos corresponding to it. Okay? But if we're nowhere near it, as much as you would love to take a short from here and hope that Bitcoin just collapses, even if you do have lots of people buying the Bitcoin, they're not going to wait until Bitcoin gets to 8K to just, or even get down to 30K to be thinking, should I get rid of it? No, I think the sweet spot where it will challenge investors on Bitcoin is if it were to actually break down beyond 50. That's where I think it's going to be. If Bitcoin does break down beyond 48,600, that's really going to challenge a lot of investors. And I think they'll be out of Bitcoin if it were to get to that. And that influx of investors coming away from Bitcoin would then naturally send Bitcoin lower, but it will also get a lot of people paying attention to it. That's the thing. It will get a lot of people paying attention to it. So just take that into consideration. As it stands, if Bitcoin even does come down to 60,000, that's great. That's perfect. Why? Because you're going back into the same range that the guys were accumulating from, which in principle was with all the ETF and all that story. And then it, just after the ETF, and then attempt towards the all-time high, 100K, and then it's come back down again. Remember, it hasn't spent a long time at this 100K zone, so that's a problem for us. And if we look historically, the less amount of time they spend at all-time highs, there's a good chance that they're going to try and correct themselves. If Bitcoin can drop from this all-time high and come all the way down towards this price point of 15K, then we could make the assumption that the move from there, this is just pure assumptions right now. This is the assumption that Bitcoin drops 77%, okay? Let's just no, we have to work with the numbers we've got. So from this low right here, from that high, it's come down and dropped 77%. If we do the same thing right here and make the assumption that the same thing's going to happen, all right, we go down to a 77% drop would put us in exactly that same spot at 20,000. There is no problem with Bitcoin doing that. If it accumulates in and releases in one cycle, comes straight back down again, there is every reason for it to just accumulate again and then come back down to start the next cycle, okay? Because even though if Bitcoin were to drop all the way down to there, it's still in a bullish trend when you think about it, because it hasn't broken down. It hasn't completely gone down, but it's a volatile asset. And if we do then add the idea that it could actually go to 80% correction, that would put us at $8,866. An 80% correction from this high. Right now, we've only got a 30% correction. For crypto, that's nothing. That is nothing. So you've got to really say to yourself, are we in the environment for a macro switch? Which means that if the interest rates get cut, money gets accessible. I think we need the interest rates to get down to around 3.5%, maybe 3%. That there, ladies and gentlemen, will still be an awesome time for the market to just grab whatever money they can and they will plow into Bitcoin. but which point in Bitcoin will that be the case for the Federal Reserve? And that's what we really are looking for. Yeah, you know what? Listen, I'm not perma bear, bro. Listen, I am not a perma bear, bro. You just don't like me talking about price going down, which when you think about it, you should welcome it because look at the commitment. Look, people are buying it. People are there ready to buy it. That means when you're buying it at the same time these guys are buying it, you're improving the odds of price making a reversal. But if you don't like prices going down, that tells me you're the person that will buy the car that will continuously increase in value and you will always pay the highest premium for it. That's fine. You can be that dude. If that's what you want to do, that's fine. But fundamentally, that doesn't make sense. Why do you DCA? If you have a problem with someone claiming price is going to go down, you're not truly understanding what DCA is about. You need it to go down to get your dollar cost average at least decent. There's no dollar cost averaging if you're just doing this. Where's your dollar cost averaging? And you have an expectation. Your expectation is this. What realistically happens is this, of course. We know all of that. So when it's going down, your DCA story will come into play and you'll be like, I need to be accumulating Bitcoin on these drops. And then when it starts to make a move back up again, you've just got yourself a fantastic average. So if you're an investor, if someone comes to you and says to you this, okay, I'll give you this and I'll let you guys go, right? Here is your VWAP, right? And I've got $50 million of your cash. And you say to me, Tino, sell it for me. I'll be like, okay, cool. So I'm selling your stock. I wait for price to drop. I'll sell it there. Comes back up. Oh, I'll sell it there. Comes back up. I'll sell it here. So you come back to me and you say to me, yo, Timo, where we at with the average of your selling on our stock? I'll say, well, look, dude, man, I sold it here because the market was dropping, man. You know, it's going down and people are selling. So I sold there. And I sold it here as well because the market was doing the same thing, it was selling. And then I sold it here again. Do you know what your investor will do? He will slap you across the face and say, what are you doing? Give me my money. I need a new broker. Get away from me. When you're selling, you sell from the highest point. So let's just go back, right? You come to me and say, Tino, can you sell this asset for me? Got $50 million in this asset. I need you to sell it for me. I say to you, no problem. Leave it to me. I see the market selling off. Then a relief rally comes into play. I see that as an opportunity to sell. I'll sell it here. It comes back down again. Damn. All right, I need to wait for another relief rally. Cool. Comes back up to the VWAP. I'll sell it there again. Price comes down again, and then it comes back up. I'll sell it there again. My investor comes up to me and says, yo, T, how did you do with the selling, man? Where we at? I'll say to you, okay, so it did take a little bit of a tumble down to 90,000, but I managed to sell a bag of it at 136. He'll be like, okay, that's cool. Then it did go back down again and went to 61, but it managed to recover back up to 106. I sold there. And he's like, okay, that's brilliant. Then it came back down again, hit 48, and then it came back up to 91, and I sold it there again. He'll then say, okay, thank you very much, Tina. You did the best thing you could because the market dynamics and what have you. And I'm guessing you were selling at the VWAP. That is correct. So when you're thinking that Tino's a perma bear, all right, I'm not a perma bear. I'm just telling you that when prices are dropping to the downside, people are buying and then they're waiting to sell it. And that's the logic I'm trying to portray to you all, that you want to welcome prices to the downside because that's where you get information about commitment. Retail traders, you're not interested in those guys, but they are the ones that fuel the offers. And notice that every time Bitcoin shoots up, it spends more time coming down than it does shooting up. Why? Because it's retail that fuels it. They want to spend time buying it. Look at how long they spent going down here. Okay, they dropped it, and then you see a little bit of a quick recovery back up, which pretty much takes 50% of that range itself. So the faster they go down, okay, or the more time they spend going down, the more accumulation. The faster they spend going up, the quicker they want to get out. All right? If you're looking just for that, then it's going to be a bit hard for you to try and extract from the marketplace when you're being sell liquidity in principle. But yeah, that's my 2 cents on it, ladies and gentlemen. Mad love to you, bro, anyway. So, I have liquid cash, about 30K, and I was thinking 50% of it into S&P and the other 50 into the NASDAQ for a long-term hold. Are we in full correction right now, or do you think I should wait? Look, man, the way you really need to distribute that capital is you need to split it. This is not financial advice. This is what they do with hedge funds, all right? You really just want to look at it and say, right now, you really want to be in cash reserves, okay? Because things are at a discount, all right? Go to a company like this, Market Surge. They tell you the distribution days and the accumulation days. If the stock market is not closing up on strong volume for a period of 3 days or more, then there's no point in putting money to work because even the big boys aren't getting their money out and putting their money in. So there's no point in doing that. You really want to take advantage of sentiment, you go and buy bonds and leave your money in ETF bonds and see where the volatility takes us. Until we get a true path on quantitative easing, then once money does become accessible, then you can start putting money to work because people will be borrowing money to put to work. We're not there just yet. That's my 2 cents. Okay. All right, then. Anyways, moving forward, guys, mad love and respect for sitting tight with me. Make sure you are liking the stream and subscribing because we will be going live later on this evening for the FOMC. Keep an eye out on the community post on the YouTube channel as I will be letting you guys know 10 minutes beforehand that I will be going live at a specific time. I'm thinking about 5:30 UK time, which should be around roughly 12:30 Eastern Standard. No, yeah, about 1:30-ish, something like that. Well, anyway, just keep an eye out on the post and that'll give you the heads up that I'm getting ready to go live at a certain time. All right. Mad love and respect, guys. And I'll be tuning into you all later tonight.